Good day to you. I say good day rather than saying good morning, good afternoon, good evening, and all that sort of thing. I hope you're all well. This is just a quick. I think I always start off with it. This is just, but what I wanted to share with you was a scalping technique on the pound Australian dollar and just jumping on the 1 minute time frame. The 1 minute time frame. So I'm going to share my screen with you and show you the indicators that I use, which are not huge, not widely crazy in any way, and it's quite simple and straightforward, really. So let's share screen, and hopefully you can see my chart. Now, obviously, it's Sunday, the 26th of June, so the markets are closed at the moment. But this, please forgive me, this has got, where was it, 1, 2, 3, 4, it's got 4 openly available indicators on it. So if you're on the free version of TradingView, you might have to sacrifice one of those indicators, because I think you're only allowed 3 indicators on TradingView on the free version. So to give you an overall guide on what we've got here, at the top here I've got the Vortex Indicator, and I think out of the box it comes with blue and pink colors for these lines here. Now I've changed them to green and red. So green is buyers in control, red is sellers in control, basically. So see this point here where the red crosses above the green, you can see that price has started pushing down. But I've also got just the standard stochastic here, and I love using the stochastic. I know sometimes it can be a bit confusing for some people, because normally when using stochastic is an oscillating indicator, and you're looking for the red to cross above the green. In this case, I've got red and green lines on this for the sell to start, or in this case the green to cross above the red for the buy to start, and so on and so forth. But when you get conditions like this where it's not really moving that much and you think, oh, that's going to start buying, then you hold your horses, because if you're looking at the vortex at the same time, you can see that the red is still above the green. Plus also I've got the QQE threshold down here. So this is also an additional indicator. So we're selling when this is red and we're buying when this is green, basically. But you may see moving averages and stuff like that, and these buy and sell alerts. So in fact, if I just turn that off for a second. So the buy and sell indicators are from a combination of indicators that I've put together into one, so not tying up lots of indicators on the screen. But you don't necessarily need to use that. You can quite simply use this indicator here, which is Xtreme Trend, and that's extreme with just an X, not the proper spelling of EXT, etc. So basically what we're looking for, and I should tell you about the candlesticks as well. I'm on Heiken Ashi candlesticks, which I don't normally use when I'm trading on the higher time frame. It's just for this purpose on the 1 minute time frame for scalping. So all we're looking for is for the candle to close below this extreme trend line, and it also helps because that changes color. So you can see it's green when it's buying and red when it's selling. So we're looking for this point here where the candle has closed below that extreme trend, and then we're going in for a sell position. So you've also got the confirmation of the red crossing above the green on the Vortex Indicator. You could look at this point here as the start of the move, because you can see that on the stochastic the red has crossed above the green. In fact, it's actually crossed a little bit earlier than that, but as you can see, price is still pushing up. But you can see that actually it started its move down. But also at that point, in fact, let's put a vertical line on there. So we're looking at that point there, because the candle previous is only just nudged below the extreme trend on there. So we go for that candle there. And as you, well, maybe you don't know, the Heiken Ashi candles start halfway along the body of the previous candle. It may well be that in reality the candle has actually started down here somewhere, but it just gives you an indication of the trend, I suppose, on these candle styles. So we've got that vertical line where we've got price as pushed below the extreme trend. We've had the crossover of the red above the green on the vortex. And at this point, you might think stochastic's about halfway down, but don't forget this is only the 1 minute time frame as well. So we're going to get some fairly quick moves. But then we're looking at the QQE threshold, and that is where it's changed from green to red. And then we can dive in for our sell position. So if we get in, let's say, as an example, halfway down the length of that candle, it may even be further. And you just ride that down because this extreme trend is still red, still red, still red. It hasn't turned green in any way. And then you can see the number of pips that you would have caught. So down to the very bottom there, that's 36. So you wouldn't necessarily have caught that. You may have got, let's round it up to 30 pips from the 1 minute time frame. And you can see at that point there where price, the Heiken Ashi candles crossed above the extreme trend, and the line has turned green as well. And you've got I'm just going to leave that there for a second. You see the stochastic has started to point upwards. The QQE threshold has gone from red to green. So about time to get out of the trade. So that was 30, possibly 30 odd pips, but let's just say 30 pips. And that took 41 minutes. So a fair amount of time, but this is why I like trading the pound Australian dollar. It's a fairly fast moving pair. Actually, what time of day was this? This was midday on Friday the 24th. So it's a nice, simple, I think simple. It might not be simple to you guys, but let me know what you think. A fairly simple approach to, I've got a few minutes to jump on the charts. I haven't got lots of time to analyze everything. I just want to jump on, place a couple of trades, and see how I get on. So in most cases there, you'd be placing a stop loss just above the recent swing high. And then your take profit is literally when you see the line change green, see the QQE threshold turning green, you see the vortex changing with the green crossing above the red. So those are your exit signals, I suppose. So 30 pips in 40 minutes. In fact, it could have possibly been sooner than that if you'd have closed it down here when it sort of got to the 30 pip mark. It all depends what you want to get out of your trade. But if we were to place a short position on that, based on that as the entry point, the stop loss just above, and we'll go down to around that sort of level there. So look at that one. That's a 1 to 2 risk to reward on a 1 minute time frame, giving you 30 pips. So normally I might have got into that a little bit earlier because of the stochastic, but just for the rules of this, excuse me, for the rules of this, we're looking at the vortex indicator crossing at the top here, the stochastic crossing with the red above the green, and the QQE threshold changing from green to red. to get in for our sell. And exactly the same applies in reverse. So let's look at this point over here. So we've got the extreme trend is red, and then that point there, it's turned green, but the candle was closed above, probably around, I'd say safer on that candle there. Let's go with that sort of area. Well, in fact, actually the vortex has crossed there. So let's pop that as our entry point. So this candle here. So you wouldn't necessarily have missed out on a lot there. Let's just see. One to 2 pips possibly you may have missed out on. So we would then place a long position on that candle there, and we'll go about that sort of area. Again, just below the swinging low there, and then we'll go for where the excuse me, where we would get the cross of the sorry, we'll move that along a bit. So we've got the vortex crossing the red above green again. The candles have started coming below the extreme trend line. You've got the heads up of the stochastic crossing red above green, and then at this point here you've got the QQE threshold changing from green to red, and then you get another opportunity to get in for another sell. So an opportunity there to make 23 pips of nearly 1 to 2.8 almost on that, and that was being just taking up to where, sorry, every time I hover over that, let's move that along a bit, where this extreme trend has sort of flattened out there. You could say, right, well, I've just taken the take profit level to that point there. So it's fairly straightforward, I think. So once you've closed that out, you're then looking for an opportunity to get in for a sell. And as we just said, the vortex red has crossed above green. The QQE threshold has turned red. We've got the candle has closed below the extreme trend, and then you get in for an opportunity for a sell. Now, if you'd let that one run, of course, you're just scalping again. So that was 23 pips. What sort of time of day? That's 2 in the afternoon, 1:45 to 2:30. Let's say 2:30 to about 2:55 to 3. So that's 25 minutes for 20. So almost looking at a pip a minute. And then this one would go for a short position, and we'll go for probably that area there, and about halfway down the body of the candle. Stop loss just above there, and then you may go down to that sort of level there. So that would be 1 to 2.6, so it's about 20 pips again. So and again, this is just on the 1 minute time frame. You're not having to wait hours and hours and hours for these trades to hit. So what was that? That was 30 pips roughly, wasn't it? Yeah, 31. So say 30, 23 on that one. So 53 and 50 pips on that one by the look of it. So 20 pips stop loss. I mean, but that's up to you. Again, you don't have to use that if you think, actually, do you know what, I'll have a slightly tighter stop loss than that. But you can see, yes, that candle there did wick upwards, but it didn't go above that point there. So your stop loss would have been safe there. And then, yeah, 50 odd pips by the look of it. So that's just for that element there. And that again wasn't a long period of time. What time was that? That was 3 o'clock to 20, just gone 20 past 3. So 20 minutes for 50 pips. So what's that, 30, 23, 50, that's 100 odd pips just from the 1 minute time frame, based on just looking at these indicators. So it's the Vortex, the Xtreme Trend, the basic standard stochastic, and the QQE threshold. So let me know what you think. If you're liking the stuff I'm putting out, again, I apologize because I was doing loads of videos. In fact, no, it wasn't loads, let's be honest. It wasn't loads of videos, but I was doing some videos, and then I got that whole self-doubt and the whole, you know, people aren't bothered about my videos. People aren't agreeing with what I'm doing or the way I'm doing it. So I just kind of went off all social media for a while. You know, Facebook, Instagram, YouTube. I just focused on my own stuff. But I just thought, you know what, there are still people who appreciate what I'm doing, and hopefully it will help those of you that are enjoying this and want to trade this way. Again, it's really handy if, what was that? That was 20 minutes, wasn't it? We said 3 o'clock till 3:20 odd, yeah. So 20 minutes for that one. That one was 25 past 2 to 10 to, so that's 25 minutes again. But I know I'm also very appreciative of the fact that these are during the day when most people, sorry, these are all UK times, by the way, most people will be at a job, a 9 to 5 job. So there are certain things that you can do lunchtime, you know, maybe take your phone out at lunchtime. Well, there's not a lot of movement in this particular example at lunchtime because it's quite flat there. But maybe when you get home from work, you know, what time would that? So let's go for 6 p.m, shall we, around that sort of time of day, see what happens there. In fact, 6 p.m. normally, when I used to do my evening sessions, this pair was quite difficult to try and call any trades because it did kind of not flatline, there wasn't really much movement. But actually, you've got opportunities here, and even if you just went for, you know, let's take that as a possible example. That's 7 pips. You know, another. Let's mark these out again. So from that point there, you've got the, yeah, just 5 past 6. You've got the green crossing above the red. You've got the QQE threshold have just changed from red to green. The stochastic has already given you the indication, and the candle has closed above the extreme trend. And then you can jump in for 5 pips, say 5 pips. Then you've got this area here. Again, you've got the vortex crossing there. You've had the QQE threshold turn green, or maybe it's turned green the one before, and that might also be an opportunity for another 5 pips. So you could do 5 pips, 5 pips, 5 pips, 5 pips, 5 pips. So 1, 2, 3, 4, 5, maybe I don't know, maybe 5 lots there, 25 pips. What sort of time of day was that? That's nearly 8 p.m. on a Friday evening. Would you really want to be trading that time on a Friday? I doubt it, but there's still opportunities there if you just want to trade on the 1 minute time frame using these indicators to grab yourself some pips. So literally, just as a recap, you've got the vortex. When you get those lines crossing, the green above the red, looking for the buy opportunity. You've got the QQE threshold with the change from red to green. You've got the stochastic. So maybe in some cases you use the stochastic as a warning that it could be starting to push up, or an early indication. And then the same in reverse. You've got the red crossing above the green there. And then you've got the QQE threshold changing from green to red. You've got the stochastic crossing over there. You've got the candles closing below the extreme trend. The extreme trend has changed from green to red. In fact, that would have been a lovely trade to get into there. In fact, actually, yeah, that if it just stuck with that, that would have been lovely. In fact, go on then, let's have a quick. I think if I remember rightly, I think it was about 100 pips that dropped. Yeah, there we go. 112 just from that entry point there down to the very bottom. But that's if you're able to do that, because that was at 3 o'clock in the afternoon down to nearly 5 p.m. So 2 hours, 100 pips. But actually, if you're able to, and you grab 30, 20, 50, that's 100 pips there in about the same sort of time, but in just blocks. So I'm going to carry on doing videos now. I'm just going to put them on YouTube. I'm not bothering with anything else at the moment because I've had fake profiles using my name, picture. Some people use my name and not my picture. I think there was one profile had my name and it was a photo of a black woman, a rather attractive black woman, but yeah. So don't get fooled by anyone using my name offering to trade for you, or just transfer some money to me and I'll do it for you, because I'm not going to do that. But using simple processes like this, you can trade for yourself, and you don't need to have huge amounts of money to trade. I mean, I know there's people out there saying, oh, you need $1,000 or whatever it is to make it worthwhile. Yeah, do you know what? Some people will be saying that to make it worthwhile, but actually, if you're able to just jump on the 1 minute time frame, scalp some pips here and there, using sensible risk management, use the correct lot size for your account, your trading account size. So typically you should use 0.01 for $100 or pounds or whatever currency you're in. So the lowest lot size really that you can. But if you're starting to make 30 pips or 20 pips and 50 pips, whatever it is, 5 pips, multiple 5 pip moves, then you'll start to see your account building, and you might go, well, do you know what, this is taking forever. And it will do. I mean, I saw this video online. Sorry, I've gone off at a tangent. I saw this video of a young 20-year-old guy who had blown multiple trading accounts. And then he just thought, Joe, I'll have one more go and put $200 into a trading account. And he started trading oil. He was looking for something with a lot of movement, a lot of volatility in it, and oil was tanking at the time, and he turned that $200 into just shy of $200,000 in 4 hours. By basically, he started off with 0.01, made some money, closed it out, then put another position at 0.02 or whatever, then closed that out and placed another position at 0.05, closed it out 0.10, 0.20, 0.50, and just basically moved it like that all the way down within a 4-hour period. And it does take time. He was very lucky on that, well, lucky and calculated in that he was just going for it mentally, financially. He was trying to place the trade with the largest lot size that he could. If it would say not enough money, he would just go for drop the lot size a little bit and then see if that would work, and it did. So then it carried on moving, and he was just making, as soon as it got from 200 to 1,000, then on to 5,000, then on to 10,000, and it just suddenly moved a lot quicker when you're using those higher trading account sizes and higher lot sizes. So yes, if you're just going to trade 5 pips here, trade 5 pips there, or 20 pips there, it might take a while, but actually it is worth doing it, because you will find that once you start increasing your lot size in line with your account growth, that things will start picking up quite quickly. And that's great if you can also keep that money there and not withdraw any of that money. If you can build that and compound it and start increasing your lot size with your account growth, you'll suddenly see, oh wow, that's growing quite quickly. So my apologies, I've just realized I'm still sharing screen there and talking at you. I hope that is of help. Just 1 minute time frame, pound Australian dollar, moves fairly quickly. Use those indicators, the Vortex, the Xtreme Trend, the standard Stochastic. In fact, if you're only on the free account, can only use 3, I'd probably lose the Stochastic, and then the QQE Threshold. So you're looking for the Vortex change of the crossover red above green or green above red, whichever way. Looking for the candle, Heiken Ashi candles to close either above or below the Xtreme Trend for whichever direction you're trading in or looking to trade in. And then for the QQE Threshold, for that to support the move as well, by being red for the sell or green for the buy. And that is quite simply it. So I hope that helps. Let me know in the comments. If you like the stuff, subscribe, place a like on the video, and then I'll hopefully give you more of these videos to help you grow your trading account. Right, catch you guys later. Have a super fab, whatever you're doing. Right, ta-ra.